All right, my Forex family. This is Sidney Guajardo coming to you live from San Antonio, Texas. And we are the Trading Places. Okay, let's get started. I think we're going. All right, let's start the day off with gold, like every day. Let's open this up here. All right, let's erase this. Let's see what we put here. This was a few days ago. Long trend, but beware of new high. That's ever since it hit this $18,000 mark, it's kind of been in a range. I don't know if you can see this here. It's been like that for. And don't get me wrong, gold moves up $1 or $2, and it makes a bunch of money. But this movement here, it's kind of going up and down, which by far you can make a lot of money if you can follow the trend. But there's a big difference between this, where it's moving kind of this type of direction, maybe a sideways move, right? It's like in the middle of the street. But look at this one. Look at this trend. It's huge. Okay, so let me erase all this and let's kind of analyze this on a bigger time frame. This is a 60-minute chart. Let me just erase all lines and erase text. Okay, so for those of you just joining in, these are my signals here. And signals are just any type of movement of money, and it goes off of time frames and algorithms. So it's just like when you go hunting, and if you've ever been hunting before, I'll just explain it to you. You're 100 yards away. You see an object moving in the woods, right? So you kind of put your gun on it, your sight, to see what it is. Well, you don't shoot it until you see what it is. Same thing with a signal. Just because it gives you a signal doesn't mean you just go ahead. Like this one in particular, it says we're going to go ahead and take it short. Well, if you would have taken it short, it did go short, but then it went long. So you want to make sure, like this one in particular, if you would have taken this signal, you would have seen that you would have made some very good money. Just to give you an example, if you would have taken the trade here, taken it all the way up here, you would have made 13.75 points on gold. That pays a lot of money. It probably would have been about, depending on the size of your account, maybe $1,500, all within hour and a half. So very good. Now, I mean, when we teach you how to do Forex, we don't teach you how to make little moves. We teach you how to do big moves. So here's a signal here. Now this is quite of a long. Your account has to be pretty big because there's some ups and downs here. But let's say you took this move here and you took it to here. I mean, good Lord, you'd 41 points. You're paying off mortgages at that point, depending again on your lot size. But can you stomach the ups and downs of the market? And this is where you have to learn Forex to really take advantage of this stuff. So I like looking at these on a bigger time frame. Right now, this is an hour, a 120-minute chart. I like looking at it on like a 480-minute chart. Okay, so let's see. The way you analyze a chart is you got to find out where you are. You're right here. And so if you see, this is where the market ended up. And you see where all these candles, they kind of bounced off that same line. This line right here, in this case, would be a resistance line. That's where the money tests to see how far it can get. Sometimes it breaks through, sometimes it doesn't. But this is called a resistance line. Lines on the bottom are called support. Okay, so let's try to find a support line that money was just bouncing off of. Let's see here. Here's another line. This is kind of a new high. Money, the gold had never been up here for so long. So is this a good support line? It is, because the money bounced off of it, but it only bounced off of it once. So what we need to do is find an area where it's bounced off it several times. Here you go. Here's one right here. So this is where the money is going to continue to bounce. It's going to go up through this channel. This is called a channel right here. Kind of. This is kind of between support and resistance. And right here is what I call a money street. So you ever, when you throw a ball up in the air, whatever, you've heard this before, whatever goes up must come down. It's the same thing with currency. So there's only so far, like when you throw a ball up in the air, it's probably at its fastest when it leaves your hand. When it gets to the apex, it starts to slow down a little bit. Well, that's what's happening right here with this currency. When it gets to a resistance line, the money starts to slow down, slow down, slow down, slow down. When you see it start to slow down, that is when I exit the trade. Okay. Now, when it's trying to pierce this resistance line to go forward, I'm very cautious. But sometimes you'll see currency pairs that'll just bust right through there. And that's a good sign, because that means it's going to go to the next line of resistance. What you'll see is when it's coming down, it's called a support line, and sometimes it'll just bounce there and bounce there and bounce there, just bounce and go back up. Sometimes it'll just break down through. So like right here, this would be an excellent support line. Look how many times money bounced off of it. It's testing the market to see how low it can get between past 1759.60, and we'll show you some more of this stuff. Okay, so like another good way of finding out if a currency is going to change direction is like right here. Let me move this out of the way. So I'm going to put a line right here. Right here. Let me see a line right down. Where's the line? Is there a line? And we're going to do a replay. Okay? Move this out of the way. I'm going to grab my hand right there. And I'm going to move it. So as this isn't live, this is probably going back to June 5th. So as the chart's going, let's take us back to June 4th, and let's look at this here, the money street. This money right here follows the money, and it takes you to where it is. Like right here, it was at the highest point. So if it's the highest point, it starts to move down. That means it's going to try and go to its lowest point, right? So move forward here, and right there, you'll see that's at its lowest point, and that's where this line is. So what you want to try and do is you'll see that this candle body had gone down to here, and then when it retraces, when it goes back up, it leaves a trail, and we call that a shadow. When it's on the bottom of the candle, we call it a shadow. When it's on top, we call it a wick. So you'll see that if it's retracing and the next hour comes up, or the next this is a 4-hour candle. So when the next, let me put this here. So when the next candle comes out, which is 4 hours, it comes out at 8, 12, 4, and then 8 again. So 8, 12, and 4. Those are when the candles come out on the 480, because it's a 4-hour candle. So when you see it retracing, that's a very good indicator that it's going to start to go up, and that it's already hit its maximum. If it's on the downside, it's hit its maximum. If it's on the upside, like right here, right here, you see how this candle went up right here? And when it came down, it left a wick. Just like on this one, it's called a shadow. So let's go to the next time frame. I got to use let's go to the next one here. Boom. Right there, you see how it went up? That it hit its max right there. So more than likely, you see how this body of the candle is bigger than this one? That is another indicator that it's going to go up. Watch. Boom. Okay, so now this is kind of a start of a mini trend. Okay, now my indicators are set up to where, or my signals are set up to where one of these little arrows, whether it's going up or down, comes out on every third one. So let's see what happens. Look at that. Boom. Would you get in the trade here? Okay, so now you really don't know what direction it's going. Do you see these bands right here? This is a directional type of, it's going to tell you which way it's going. So right now it's pointing down, but currency can go in the opposite direction. So when we're talking about support and resistance earlier, This middle line is called a moving average. And it acts like support and resistance. Right now, since the money's on underneath the line, this would be considered resistance. When it's coming down and you're coming close to this moving average, that would be called support. So bottom line is, this looks like this line here looks like it wants to cross in the middle of the street. This looks like a very, very safe bet. It went up, but it's starting to come down. So right there is a good indicator that it might start to come down, or just something may have happened. But let's see. It's a good bet that it's probably going up. Let's see what happens. Boom. It went up. Isn't that a great move? Look at that. Now on a 480 candle, this is a lot of pips, which translates to money. Okay. So let's go to chart value. Let's see how much money you would have made. Well, not this one. Let's go to chart calculator. Let's see how much money you would have made. Boom. 30 points. That is a great move. Great move. Especially in the course of a day, that would probably pay you about $3,000, depending on your count. So it went up to its highest point. It started coming down. You see it left a wick. More than likely, the money's going to come back down. Do you see how it hit this top of this band? This, by the way, this squiggly lines here, this is called a Bollinger Band. So the money pretty much hit the top of the Bollinger Band. So whatever comes up must come down. But you see this money line here, it still wants to go across the street. It still wants to move. So I'd be very cautious. But let's see what happens. I think it's going to go up. Oof. It went up, but it started to come down. I definitely would have got out there. But let's see. You wouldn't have lost money, but you wouldn't have made any money. You wouldn't have made any money either. So this is a good chance to get out of that deal right there. Let's see what happens. Boom. Man. Oh my God, look at that. Another signal came out. Let's see. So this is where greed can get the better of you. I'm just going to take it all. Just take it all. So at that point, you have to just, you don't want to play with emotion, because whatever is up must come down. Okay. Let's see what happens. Oh, look at that. Just came down. So it hit here. It could bounce off this moving average and move up. Let's see. See, now look at this. In this way, it did pay off. But hindsight is 20/20. Let's take a look here. If you would have stayed 58 points or whatever that is, I think it's 58 or 56. That is a lot of money. Lots of money. It's already starting to come down. Look at that. You see that? Signal. Boom. If you would have got in there, you would have, oh man, you would have made all kind of money. It started to come back up again. See what happens. There's a signal. Do you take it? You see this RS, the money here? It looks like it's in the middle. I don't like taking trades when it's in the middle. I just don't, because you never know. It can go one side or the other. Forex doesn't care about you. It'll take all your money. But let's see how good this signal is. Another signal. Could be strong. This is a perfect example about how signals, you just can't go off of signals. Let's see what happens. Yep, you would have made money. You would have had some problems with stress, probably pull out your hair here, but the signal so far worked. Look at this. Boom. Oh my God. Look at that. This is just, I mean, this is why we refer to King Solomon as the know-it-all. He calls me all the time, wants a raise. But most of the time his signals work. But you have to know what you're doing. Look at this. The trend is starting to go up here. Look at the Bollinger Band. It's starting to move up. Let's see what's going on here. Oh my God. Look at that. Just killing it. Let me see here. Let me erase this stuff. Boom. Look at that. Oh my God. So, do the signals work? Absolutely, they work. So let's move this down here. Let's go to the next one. All right, so let's change this back to 60 minutes. So right now, this is a direction that the money's going down here, that the money's going down here, and the money's going up, up. Do these agree? For most of you who've never been on our Forex live trading show, let me put this back to the regular date. Okay. When I talk about agreement, I'm talking about these money ropes have to all be facing in the right direction, up or down. If this one here, okay, so let me give you an example. Which way is this currency going? It's going up, right? This is going up. So this one, if there was a money rope here, it would be going up, okay? This one is kind of going up, and this one, it kind of wants to go up, but this one is definitely going down, and this one is going down. Another way you can tell if the money is going up or down is the color of the screen. This light color, I'm not even going to try to guess what color it is, but it looks like a light beige. I'm colorblind. And this kind of looks like a pink, okay? So when it's light, and when the color's light, that means it has a tendency of going up. You see this? Red goes down, white goes up, okay? Give me 1 second, hold on. Okay, so this is a 60-minute, and it's going up. The 120 is kind of going up, and these kind of don't agree. So this one, you know, gold really moves like a slippery fish. So the last thing that you want to do is use an indicator, because this thing will move on you like crazy, and you can blow up your account. So that's one thing that I don't like to use is an indicator. Now, we can definitely use structure when we're doing this, but it moves so quickly and it's so volatile that you really want to, let me just see here. Let me see here, why? Try this here. I wish I can move this screen here. All right, here. Okay, so let's move this up here. What you want to do when you're trying to read a screen, 60 minutes is probably not the screen we want to use. Let's use a higher time frame. Let me see. Let's use a 480 minute. 480 minutes gives you it gives you the same screen, but at a lot. Let me see here. Something's wrong with my screen here. I can't really see the top of this here. I wonder why it's doing that. Maybe it's just the trade pair. Let me look at another trade. Oh, this is weird. That's a weird adjustment here. Okay, so when you're reading a chart, you want to look at the lows, and this is just, it just really bothering me here. There we go. All right, so we need to look at the highest. We need to find out where we are at the highest, and you want to find your lowest. So let's put a horizontal line at the highest, right there. And let's find the lowest. I suppose this is the lowest. Just for now. And then you want to find some support and resistance. Is that support? It could be support or resistance, but there's only, if we use this one, it's only bounced off of it once. Actually 1, 2, 3 times. When we're trying to find some resistance, we're trying to find where it's bounced a whole lot of times. So we can use that. This is a good one right there. It bounced here. It bounced here and here and here. It also bounced there. So this is US 30, and US 30 does follow Fibonacci. It just does. Pretty much anything that's traded follows Fibonacci, okay? And even though these lines that I put up is not Fibonacci, it is not Fibonacci, but it is support and resistance. And these lines, you guys need to figure out support and resistance just like this. Let me so no, that's not what I want. It bounced here, it bounced here, it bounced there. It's bounced several times. You see all these bounces? And you guys have the same tools I have in Sierra charts. You want to find these where the support and resistance was really, really strong, okay? And I'm really writing this, I'm really putting this down here. You get it right there. Okay, so in business, the only thing that you can gauge on is history. So, and it seems like in Forex, money always wants to go back to support or resistance. Always. That's why when money is moving, it always struggles when it gets to these support or resistance lines that you put up. Look at this, like in this case, this money came down here in the next candle. Let me put this up here. Right here, you see how this candle came all the way down? The next candle came down, it went right down to that line, and what did it do? It bounced up. It bounced up. And it hit this line, went all the way to the moving average, and it bounced again. It bounced, and look what it did. When it bounced, it went all right here. And if anybody's ever traded the US 30 before, you know that if it moves that much, you just made a bunch of money. Look at this candle right here. It bounced off the Bollinger Band, and it went all the way back up to the other side. Now, this is a small drawing. It doesn't look like much, but man, did it fly. It went all the way up here, and it bounced, and it came all the way back here. That's all money does, is it bounces. And you got to look at it this way. If you're jumping on a trampoline that's made for a child, and an adult gets on it, what's it going to do? You're probably going to break it. You're probably just going to bust right through it. So that's my example of a weak support line or a weak resistance line. Okay, same thing here. Do you see how many times just on this line here this money's bounced? So when you're trading on a current candle and you see, let's say for instance the trade is coming back home, back to this line here. If it comes here, what do you think it's going to do? It's probably going to test it and bounce, test it and bounce. and maybe test it again, and it might just break through. Once it breaks through, then you could take that trade short. Okay, if you're going long, the same, let's say the line comes back up. It's coming through here, and you want to take the trade. I wouldn't take the trade until after it tests this line and goes above here. It's all over the place. So that's support and resistance is how we make our money. So, and you'll notice these support and resistance lines are everywhere. Let me get rid of this. Hold on. Whoops. Let's go to a 480-minute chart. You'll get a bigger picture of it. You see that? You see how it, all those, it's kind of just bunched up. Let me see if we can make the screen bigger. You see that? Let me do some erase lines. So this is a 480 candle. So that's what 4-hour candle. Yeah. So every candle is worth 4 hours, and so there's lines just everywhere. That's why I brought the crosshairs out. Look at this. That's a powerful, powerful line right there. 26,098, right there. That is a very, very powerful line. Give me 1 second. So when you're pulling up a chart to look for trades, you're gonna have to find out where you are and where the lowest has been, and you start marking up your support and resistance, like where a candle stopped. Is that a support and resistance? Yeah. Is it a strong one? Probably not. So just by looking at it, I see 1, 2, 3, 4. Just put it there because it bounced. Okay. Let's find another one. Look at that. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. That's a strong one. I'd mark that one. Let's come down to here. Is that a strong one? Yeah. Look at that. 1, 2, 3, 4, 5. There's a lot. So when money gets to there, it's probably going to bounce. So you're going to have a hard time if you get into that trade right before that line and you expect it to go up. You're going to have a hard time. Now, if you're trying to do a trend reversal, it's probably going to be a very easy one. Let me give you an example of what a trend reversal is. Where's this one here? Right there. Okay, you see how this if we were doing live, this candle was struggling to get there, and when it did, another candle came out, and that line is so powerful, it created that wick. It created that wick right there. And look at that. It just created a wick so bad, it started another trend. It went all the way down to here. Can you imagine if you were in this trade for 1, 2, 3, 4 for 16 hours? Oh my God, you would have been able to pay off all your debt. I mean, that's 600 points. That is a lot of points. That's huge. That's a lot. That you'd have been rich just on that little move right there. People with a lot of money, when they see stuff like this, it's on the bottom of the Bollinger Band, they know it's going to bounce, and they see it's at the bottom of the street and it's going to go up, and then they trade news as well. Look at this. 2,200 points. That's hundreds of thousands of dollars just right there, and just going off of my signal. That's so you know that it's going to go up because it bounced off of this, it went up, and then there's confirmation, and it just kept going and going. It dipped down here a little bit, it did, but even from there to there, this one bounced off of here, and it just kept going and going and going. But 2,200, almost 2,300 points. So very, very cool. So let's look at a few trades. Let's look at euro dollar. Let's open this little boy up. We did a bunch of chart training today, so what we're probably going to do is do this trade and maybe another one. This is so weird. Why isn't my that means I need to get a bigger screen. I don't get this. Okay. Let me try this here. Okay, so we're definitely in an uptrend. Let's figure this out. And now, we just came off of this downtrend here. God, this is really messing with me here on this screen here. Okay, so this is definitely going up, and it just came. Oh, this is so frustrating. So we got to figure out where we are. We just came from here at the highest. Euro dollar is at its all-time high. It hasn't been this high in such a long time. You see that? I mean, look how far it's been. So this thing is definitely ready to come down. So what I would do is I'd be waiting for signals. It's already starting. Look at that. It's already starting to come down. So I'd be waiting for signals, these purple signals here, right around this time, to start going down. And it's going to come down. There's a lot of real estate. Lots and lots of real estate to come down. This is a perfect trade. This is what you're looking for. I know a lot of people try and do the 10 pips. I like to go for 50, 60, 70 pips. If you want to do that, this is the pair to do it on. Look for, whoops. Put this 715. Look for, oh, I misspelled a 4. Look for short signals from King Solomon. So this is what I'd be looking for. Am I a genius? Nope, I'm not. I can barely, if there's a math problem past 5, past 10, I gotta start taking off my socks. But anyway, but I do know whatever is up must come down. Now, can the euro dollar keep going? Of course it can. But let's look at history. Hasn't been here a long time. Let's go to the day chart. Let's see what happens there. Let's go to the 1-day chart. These are days. This is September of last year. Still hasn't been that high. Oh, look, it was there in March. So can it get up there? Well, it hasn't been there in a few months. But more than likely, it's probably going to go down. It's probably going to go down. So I'd be looking for some short signals. I definitely wouldn't take it long because it hasn't been there such a long time. But it is going long. So you have to be patient. Now, if we got a long signal and it's down here, take it all day. Take it all day long. Or even if it's down here, this is where I like taking them. But it just makes sense that it would need to be on a down slope. But look at this. Can you imagine being in that trade? Oh my. Yeah, you'd be rich. But it took, a whole month to get down there. So you'd have to be in that trade for a long time, but your account would blow up just with one trade. So, all right, let me, we'll look at one more trade, and then we got to go. Let's look at dollar yen. I apologize. Something happened. I updated my computer and I can't see the entire screen. I'll have to get that fixed. So let's erase all our work we did yesterday. Okay, so on this dollar yen, that means the US dollar is paired with a Japanese yen. Okay, so, oh, this is the daily. Let's look at the 60-minute. Just to find out what we're dealing with here. Okay, so it did come up from the bottom. It's already starting to move up. And it is still going up, even though it's on a slight downtrend here. You can see, let me get my, you can see that when the market closed a couple hours ago, the market did go down. But we have Tokyo opening up, Australia opening up, and then tonight around 2 in the morning, Europe's going to open up. So nothing's really moving right now. But you see the last thing it did is on this line here, this little shadow bumped off of that and it's going to go up. And when the market opens, it's going to surge up. But it just came off this big downtrend. And this is what we're looking for. If you want to make a lot of money in Forex, we have to look for trend reversals. Can you make money here and here? Yes, you can make it. You can make tons of money just going off of support and resistance. But what would you rather have? Would you rather have money that's up here and then all of a sudden you get a signal and it drops 80 pips? Or would you rather work with 10, 15, 20 pips? There's nothing wrong with that. But I'd rather look for structure. I'd rather look for trades that are down here. You see in the money street? I'd rather look for trades that are down here and that are moving up. It's so nice just to see your account just blossom like that. So I'm going to put... what I'm going to do on a text message, look for signals. You hear my little puppy in the background? PM session. Okay, so I definitely good. Now, Forex has a mind of its own, but I'm going off of pure history. The money was down here, and it moved up. The money, I mean, it just makes perfect sense. It was down here, it moved up. So do you think it's down here? Can it go up? Yes. Could it go back down? Of course it can. You know, the average Forex trader with no training would see red candles, say, I'm going to take it short. And then, boom, they just blow up their account because it goes the other way. So all I know is we have a trend and it's going up. So US dollar versus JPY. So let's move this out of the way, put this back here. I have, most of you know that I trade Forex for a living, and I trade a multi-million-dollar account for an Australian firm, and we have a meeting here shortly. So, and that usually once or twice a week, but our training usually runs from 6 o'clock to about between 6 and 6:15 to 6:30. So, and that's every day, Monday through Thursday. We don't train on Friday because the market closes at 3 o'clock our time, and Saturday nobody's trading, and then the market opens up on Sunday at 4 o'clock. So there's no training then because there's no major markets open except for Australia. But we will start training every day, Monday at 6 o'clock Central Standard Time. Use the same code, it doesn't change. And most of you have my email. My students have my email, and they also have access to the Trading Places VIP room where I also give trades. Now the trades I get, I'm just going to tell you whether they go long or short at that point, you have to make a decision whether you want to take them or not. So, and that's also in the pinned disclosures on the travel on the Telegram. But anyway, we are www.thetradingplaces.com. If you'd like to be a student, it's $3.99 to start and $99 a month, and you get the training every single day. I'll help you set up your indicators once you get them on the Sierra charts, and that's pretty much it. And we have we give you a road like a blueprint to success on how to do this. We show you what brokers to use and all that type of stuff. We basically hold you by the hand. But anyway, it's kind of a weird place out there right now. People are angry, country's divided. So just love the one you're with, hug your neighbor, treat your family like you would your neighbor, because sometimes we treat them better, and help someone if you can, because I really feel that we're put on this planet to help people that can't help themselves. So from the Trading Places, this is Sidney Guajardo, and we'll see you tomorrow. Thanks a lot. Bye-bye.